But right now, let's head back to the TCS headquarters for the next round. Reema and Prashant in conversation with Krithivasan, CEO of the company, as well as N Ganapathy Subramaniam, Chief Operating Officer. Back to you guys.
All right, thanks very much, guys. So we have the top leadership team at TCS sitting down with us. Gentlemen, good morning. Great to have both of you. And I want to start the conversation by just offering our deepest condolences for the passing of Mr. Firoz Vanzriwala, somebody who we all looked up to. I've had the pleasure to interact with, over the years earlier. So it was a great loss. Condolences.
Thank you.
It's been a good quarter, just to come to the business at hand. And you've beaten revenue expectations, you've beaten margin expectations, and suddenly there is this spark of enthusiasm. At least, I'm not sure how you guys are feeling, but all of us are feeling good. Are things looking up, or is just, sort of inter-quarterly kind of things which have made slight difference? Because they're not big beats, they're about 100 basis points, 200 basis point beats. Yeah.
Prashant, we are overall optimistic. We've been seeing the total order book wins, and we also seen many of them converting into revenue. So overall, we are optimistic. We are not. I think it's too early to call that things will be back to normal or back to good old days. But overall, we are optimistic.
Krithi, last time you spoke about there are leakages in your existing business. So while you are winning fresh deals, the reason why revenue was not growing is because leakages in your existing business, because when projects came to an end, they weren't renewed, discretionary spending itself is down. What's happening on this leakages front? Is it lower compared to what we've seen 3 months ago?
It's more or less same, Reema. It hasn't changed much. It hasn't changed much. But what's probably helping us is that we are putting more at the top than as the leakages remain same, we are putting more at the top.
When do you think leakages could, trough out and start going?
It's more a question of clients having confidence that these programs are going to return some other ROI on these programs, or the demand on ROI comes down, or they are confident about the overall economic situation, number of factors, but I think it's a overall economic sentiment that would change.
This economic sentiment business in the US, we've been waiting for a recession in the US for a year and a half now, right? And the data suggests, last night's data, for example, suggests that things are just, they may not be great, but they're okay. They're not, so this wait is what is causing all the trouble, not the actual thing.
Absolutely.
Yeah. I think, if you take India, we are used to our inflation being higher than the growth rate. And successfully, year on year, we have always managed it. And actually, because how the inflation is driven differently in India compared to what is probably there. But in the US market, if the inflation is actually higher than their growth rate, then, people really watch out. And then get into cautious mode, look at sentiments, look at what the consumer sentiments are, what the enterprises sentiments are, where the business volumes grow, how the stock market is performing. Many of these things play out, right? The way we see it is that in our client portfolio, it's kind of moderated, right? There are clients who are spending. There are clients who have gone with the cloud migration, cloud transformation kind of projects, which they are not holding. They say, look, keep doing. To answer your question in a different way is that the projects that got initiated 2 years or 3 years before, at that time, Gen AI was not there. Okay. So I think some of the holding back is to step back and see whether we need to tweak the architecture and then come back to it. So they are kind of stepping back, but it's not, does not mean that it is backing down.
Your cohort of customers, are they operating with the base case that we will get a recession in the US in 24?
I don't think they are talking about recession, but they are more worried about the inflationary trend. Second is that in an election year, they want to see some definitive trends, right? In terms of who is going to be the candidate, right? And where the wind is.
We know the candidates. Where
the wind is
I would say they are more cautious than who are expecting a recession. They just want to be cautious.
That's interesting, though. Are you saying that one or the other would make a difference? in terms of how...
I mean, I think from a policy perspective, I think it will become clear, right, whether it is Democrats or whether it is Republicans, and where, you know, they have their priorities. That indication will come through, right? So
then too early to talk about, so with the start of the year, one of the things we always talk about is client budgets, etc. So too early for that, or, I mean...
No, I mean, I think we always stated that, look, budgets are there. It's not that budgets are not there. And then, you know, most corporations with whom we have worked on, they all said that, look, we have not heard anything like a budget cut or anything. But the way that they want to spend, the discretionary part of it, is where, you know, they're saying that, look, let's take a quarterly approach to it. Let's be agile about spending and see what, because if you take generative AI, artificial intelligence kind of thing, there are startups, there are products and solutions are coming every week. Something new is happening every week. So they want to see how those solutions are relevant to their business, what use cases will deliver the big bang for the buck that they are going to be spending. And all of that is making them say that, look, I'm going to be looking at a quarterly budget horizon. I'm not going to commit to you on a long-term budget.
That's better than 15 days, right?
Yeah.
Move to a quarter. Just joking, but...
No, absolutely right. Absolutely right. Yeah.
Gentlemen, I'd like your view on BFS, right? That's over 30% of your revenues.
right.
Has BFS bottomed out? And I'd like both of you to answer. And
Yeah, we see, like we explained yesterday also,
Yes.
like there are two major headwinds for us in BFSI last quarter. There are some large programs coming to an end and seasonal furloughs. And if you would, going forward in Q4, we don't expect, at least the furlough will not be there. So that would provide a tailwind for Q4. I would like to believe that probably like it's bottomed out, but a quarter or two will tell us. But signs are positive.
okay, NGS, BFS, the worst is over. Q&Q growth from here on.
I think we will see growth in Q4.
Okay.
And the deal wins that we have had this quarter is very broad-based, and BFS also contributed to those deal wins. And overall, you know, I think I would say positive rather than, you know, negative.
You also said yesterday in the press conferences that we could see furloughs in Q4. Is that normal or?
It's normal.
That's
normal.
Basically, it's 3 weeks of furloughs in the Q3. And about a week to 10 days in Q4 is what the norm.
Okay.
And we are not seeing anything different than usually that we experience.
Krithi, one of the things in the call, I think what many have pointed to is pent-up demand, is the phrase that you use. What does that mean? Is there actually pent-up and it will come out of the gates when this macro uncertainty clears?
See, because as much as enterprises are spending on technology, we believe that all of them have a lot of technology debt. Okay, and they have to address the technology debt going forward. And they're not spending because of the market sentiments we spoke so much about. So once that clears up, this pent-up demand has to come back and it has to be addressed. And we are very sure that that will also drive growth going forward.
NGS, can you talk about the deal wins? Why is it that the industry itself has not seen mega deals this quarter? And you also spoke about the qualified pipeline being higher. Talk a little bit more about that.
Yeah. See, deals of large size, right, what we call as mega deals, takes its own cycle, right? Generally, they take about 12 to 18 months or sometimes even 24 months to mature, right? And we've got to have them in the right pipeline. So I don't see lack of opportunities. There are deals that we are, let's say, shaping, we are qualifying, and then I think they should come, you know, in the coming quarters, right? The way that, you know, I will put it is that 8.1 billion of deals this quarter comes on the back of 3 quarters of 10 billion,
10 plus.
right? So we are happy with what we have got in this quarter, and it's very, very broad-based and deal sizes of small to medium size, which means that we will be executing all of these deals in, let's say, 12 to 24 or 36 months, right? Which is actually good for us to see the growth, what can happen to the growth of FY25 and so on. The other way to look at it is that, look, while we are talking about banking, financial services and so on, all the industries, one of the big players in terms of deal values and is the big tech companies. Right? Big tech companies, if they don't come out and then say that, look, I'm going to be putting this, I'm putting that, then, that will also have an impact on the overall deal value. And I hope that, the big tech companies also come back to the parties pretty soon. Right?
But, the news flow which we're getting over the last couple of days in terms of fresh layoffs or from the big tech companies, some of the big tech companies, is not particularly heartening. Would you agree, NGS?
I would think so, but I think the other way to look at it is that they are the ones who are also embracing Gen AI probably faster than any of them, and they see the potential of Gen AI. Because all the others we are seeing the use cases and see how do we exploit the technology into this, right? And the big tech companies, if you really look at it, whether it's Microsoft or others, they're all looking at Gen AI as a big source of productivity and efficiency gain for them, right? And delivering some of those products into the field is going to be the critical thing. So they are focusing on that, right? So in that sense that they are employing the Gen AI for their own internal productivity, internal deliveries, to show to the other industries saying that, look, this is really real, this is going to work for you, right? On the other hand, the industry verticals have to see how we can exploit the technology for a particular use case or particular business area, and whether it is sustainable, whether it will have regulatory issues, and so on, because the tech companies don't worry so much about regulation and compliance aspects, whereas each vertical, as they employ these technologies, we need to worry about the risks, we need to worry about the fact that it is responsibly being used and be compliant with all the regulations that are there. World over, every government is looking at saying that, look, how am I going to regulate this artificial intelligence? So that jury is not out there on that for many markets. So let's see how this pan out, but internally, we are also looking at Gen AI in a big way. We have done a lot of pilots, we've done internal projects, and we are quite excited about the possibilities that it can create for ourselves and for our clients.
Krithi, if BFSI grows in Q4, which is the base case assumption for now, will North America also grow?
It should, because we are doing well in manufacturing, we are doing well in energy resources. Life sciences has been doing well. If we are able to turn around BFSI, we should have a good turnaround.
Because North America has clocked negative growth, I think, for 4 quarters in a row now.
That's right.
Okay.
Yeah.
And what's the outlook on the other 2 verticals which have been under pressure? Retail, this quarter was a bit sluggish, and communications.
Retail probably should turn positive in near term.
Near term. Near term is 1 to 2 quarters?
May not be in Q4, but soon.
Okay.
I think communication will have more structural issues. It will take more time to turn around.
And the growth in manufacturing will continue, you think?
See, growth in manufacturing should continue for us because we are having both the industry itself is reinventing, and we are also having very impressive market share gains in manufacturing.
Okay, one quick question on Gen AI. In Q2, you had 250 Gen AI projects that you all were working with. I think 4 of, and they were all sub $1 million in size. What's the number as of Q3? Are they moving, higher in value?
Yeah, they're all, being converted from pilots to actually moving into production, as we say. And then there is a steady pipeline, of such deals, right? But most customers are testing it.
But they're sub 1 million still.
Yeah, they are sub 1 million, they're piloting it, and then the whole question is, how do we get the architecture right? How do we make sure that whatever we come up with doesn't spoil the party, right? And make sure that it's nicely embraced internally as well as by their customers, right? And there are many projects that we are doing, including, for example, in the area of wealth management and advisory, client advisory. How do we, take Gen AI into advantage? So many such things are there. It will consolidate itself. I would say that over the next 3 quarters, in my opinion, this technology should mature and deliver some real good value for the industry as such.
Got it. Just one last question. F525, right, is what everyone is focused on. now as compared to the end of the second quarter, how many more degrees optimistic or lesser optimistic are both of you? I mean, if I can...
I don't want to put a degree.
Or are you is the same?
We are optimistic, definitely.
Okay. 5% more, 10% more optimistic? It's an unfair question, but...
I would say reasonably optimistic.
Reasonably optimistic. And yes?
FY25 will be better than FY24.
Better than 24.
Okay.
I think we'll leave it there, gentlemen. Great to have both of you with us here on CNBC-TV18. I wish you all the luck for 2024 and FY25. Thanks very much.
Thanks, Prashant.
Thank you.
Thanks, Reema.
Thank you.